What's up, everyone? Welcome back to another Cryptopolitan podcast. I'm Anush, and today we've got a conversation I've been really looking forward to. Joining me is Josef Tětek. Joseph leads Trezor Academy, the education arm of Trezor, one of the oldest and most trusted names in crypto and Bitcoin self custody. He's also the author of a book called Bitcoin Separation of Money and State, which I actually read a while back and it has definitely stuck with me. The core argument in that book that money and government need to be decoupled the same way we decouple church and state. That idea sounds almost philosophical when you first hear it, but then you look at what's actually happening on the ground today in places like Nigeria or Argentina, and it stops being philosophy. It's just describing reality for hundreds of millions of people around the world today. And that's really what this episode is going to be about. The Bitcoin adoption story that's unfolding in the global south is massive. And I think a lot of people in the Western crypto bubble, if you can call it that, are not paying nearly enough attention to it. The numbers speak for itself and they tell a very different story from what you get through scrolling on crypto Twitter. So, Joseph, thank you so much for joining us today. It's a real pleasure to have you here as a self-custody enthusiast myself. Do you have anything to say apart from what I've started off with?
Hello, Anush. Yes, thank you very much. Just what I can add on to that introduction, I've been working with Trezor for 5 years now, since 2021. And we've been running the Trezor Academy, the educational program, since 2023. So that's about 3 years at this point. And we are mostly focused on Bitcoin education in the global south, which is mostly Latin America and Africa.
Amazing. So I've been going through some of your work, and I think you're in a pretty unique seat, right? You're running education at Trezor, which means you're teaching people about Bitcoin and self-custody as well. But you're also at a space that actually sees the data for what it is, right? Who's buying hardware wallets, where they're actually buying them from, and how they're using them. So I actually want to start out a little broad. From where you actually sit today, what does global Bitcoin adoption actually look like right now? Because I think most of us have a version of it in our heads, and I'd be curious whether the real picture matches.
Oh yeah. So let me start by just painting a broad picture in terms of what money is supposed to do for us. And money in general has two basic functions: the store of value function to reserve our purchasing power for the future, and the medium of exchange to just facilitate transactions in between each other. So what we see in the West, or maybe we can call it the global North, is Bitcoin being used mostly as a store of value because the fiat currencies, the state-issued currencies, usually do pretty good job of medium of exchange. You can pay in cash or via digital means like PayPal or debit, credit cards, bank transfers. You can pay via that quite easily in the West. So people, if they tend to use Bitcoin, it's mostly for savings as a store of value. Whereas in the South, in the global South, we see Bitcoin used predominantly as a medium of exchange because, again, the fiat currencies, for example, in Africa, don't really work well as a store of value. It's very hard to save in a currency that undergoes 10% inflation per year or more. But there's even more pressing issues for, let's say, the population in Africa, which is being unbanked and having no means of digital payments. So Bitcoin and to a large extent stablecoins as well usually tend to be adopted as a medium of exchange in the global south because there is little to none banking infrastructure and payments infrastructure, and especially cross-border payments infrastructure. So we see Bitcoin and stablecoins adopted as a medium of exchange in the global south. So that's what we see. And in terms of self-custody, the ratio of people that self-custody their Bitcoin or cryptocurrencies isn't that high. It's definitely lower than we would like to see. I'd say it's less than 10% of all people that hold any kind of cryptocurrency self-custody it. Usually people just hold it on an exchange. But it is still growing in absolute numbers because the people that adopt Bitcoin, stablecoins, or cryptocurrencies is growing at a very fast pace. The ratio of self-custody Bitcoin isn't that high, but it is still growing in absolute terms. So, yeah, that's like the broad picture that we see.
Yeah, that's interesting because I think my journey into Bitcoin and crypto at large was the whole concept of the store of value narrative, right? And I think that store of value narrative has actually come about even more now with the whole geopolitical setting that we're in under. And that narrative, of course, sticks with people within the global south, right? I think it resonates a lot more to people where their economies aren't necessarily succeeding, right?
Yeah.
So yeah, I think that's interesting. But there's also a narrative right now which is pretty dominated by the institutional side of things, right? We've seen that accelerate over the past few years. We've seen ETFs, we've seen sovereign reserves, nation states even stacking sats, right? But when you actually peel back that layer, who is actually using Bitcoin day to day? Is it the grassroots picture, or is it anywhere near as exciting as the, quote unquote institutional headline? Or is there a sort of disconnect that's actually happening there?
Yeah, so this basically goes back to what I said about the West versus the global South, store of value versus medium of exchange. Basically, all the ETFs and sovereign assets and nation state adoption, that's about store of value, not transactions at all. So people in the West that are looking for like alternative financial asset, let's say, they might be fine with just buying an ETF or buying a MicroStrategy share and assets like that because they don't need to do a Bitcoin transaction. So yeah, that's definitely the kind of adoption we see in the West. Not that interesting to me, and I would say not that interesting to Bitcoiners as such, because there is you miss the main characteristics of Bitcoin, which is sovereignty and freedom to use your money as you see fit, making all kinds of transactions with your friends around the world. If you hold an ETF, that's not possible. You might have some price exposure, but otherwise you're missing, I would say, the most important aspects of Bitcoin. So what we see in the global south is basically a direct opposite of that, of any ETFs. We see Bitcoin being used as a means of payment, sometimes as a store of value as well, but definitely as a medium of exchange. A lot of times via Lightning. We see a lot of people earning Bitcoin from abroad, which otherwise would be impossible. If you live in Burundi and want to make money out of Europe, it's very hard to get funds from Europe to Burundi. But with Bitcoin, it's very easy, and you can do it in a couple of seconds. And we see a lot of people doing remittances, especially over corridors which are not covered by any financial infrastructure. For example, my favorite story is there's a lady in Botswana who comes from Cuba, and she sends money from Botswana to her Cuban family in Cuba. And I think it would be otherwise impossible to do it any other way than Bitcoin to send money from Botswana to Cuba. So we see a growing amount of Bitcoin adoption for that use case, for remittance payments that are possible, because, for example, Cuba is under international sanctions, so it would actually be impossible to get the money in any other way. But also, not only it's possible, but it's also much cheaper and faster for the people involved. So again, Bitcoin solves a very pressing issue in terms of payments in the global south, and we see quite a lot of adoption on that level. And I think that's one of the most interesting developments that we see in Bitcoin today.
Yeah, definitely. And I also think that, when we were talking about the West specifically, I think there is something worth unpacking there as well, because if we look at the adoption rate, let's say just in the US alone, uh, there was an index that dropped last year, which mentioned that they were actually second in the whole lineup. I think India is number one. But when you actually dig into the why, it's mostly ETF flows. It's the regulatory sort of tailwinds that's happening in the US right now. But you don't really hear about the average American suddenly, starting to run a node or, learning what a seed phrase is. So my question here is that real adoption? Does it actually matter in the long run if a country's adoption per se is just people getting exposure through an ETF or a brokerage account?
Yeah, that's a great question. And yeah, it's always kind of misleading to see these kinds of charts, especially if they cover like the flow of funds, because yes, the West is the richest, the United States, definitely there's like tens of billions of dollars flowing into ETFs and other assets somehow connected to Bitcoin. So yes, then they end up on the first or second rank of the chart. But one interesting question I got asked, I think it was in Cape Town at the Adopting Bitcoin Cape Town, the recent conference in South Africa in January 26, was how many circular economies are there in Europe? And or they asked, I think, about Czech Republic, and I said basically none. Like we don't have that. That's the thing of Africa and South America, building circular economies. Meaning, circular economy is just a small community where Bitcoin is used as money for payments and savings instead of a fiat currency. So we don't have that in the West. So if we build ranking in terms of how Bitcoin is actually used on a grassroots level, for example, in terms of how many circular economies there are, these rankings look very different. So always depends what you're looking at. But yes, as you said, there's not that many people in the US probably starting their own node, although there are like very good infrastructure projects connected to running a node from the US. I think Umbrel, maybe Start9 are based in US. But in terms of portion of the population, it's a small portion because most people will tend to just buy an ETF. In the global south, you don't have any ETFs. If you want that Bitcoin price exposure, you basically just buy Bitcoin. Oftentimes, you don't even have an exchange where you can hold the Bitcoin, so you need to self-custody it. So I think the portion of like real Bitcoiners is a bit higher in the global south, just simply out of necessity, because that's just how you adopt Bitcoin, because you don't have this like neat tooling and regulatory clarity and services that just offer these kind of derivatives, let's say. But it's very interesting that India is on the first rank. I'm not too familiar with like India. Maybe I'd like to ask you how is that possible? How come India is number one?
Yeah, I think there's been a lot of infrastructure boom lately with crypto and the accessibility to crypto through a lot of exchanges that have made the process very seamless. So in India, we have this infrastructure called UPI. Basically, very quick transfers of money, and we can transfer and on-ramp into crypto pretty easily now. Of course, we still have a huge tax burden when it comes to crypto. We have a 30% flat taxation. But regardless of that, people still want exposure to this asset class because they sort of understand the digital aspect of it. I think India as a population, it has a very young population that understands tech and understands the sort of long-term vision of this asset class. But I think primarily it comes down to accessibility. A lot of people now, I would say most people have access to internet, have access to a smartphone, and that's all you need to really get started here. So I would say that
Yeah.
for the past 5 years or so, that's the sort of trend that I've been noticing.
Yeah, it's a good point you make about the age of the population, because that's also one of the major factors and the major difference between the West and the global South. For example, Germany, the median age is 46. So more than 50% of the population is older than 46. And in Nigeria, it's 18 years. So that's a very different picture in terms of how digital native people are and how many biases they carry around and stuff like that. So we definitely see much younger populations across Africa and Latin America to some extent as well. And I mean, young people don't really care that you cannot like touch Bitcoin or anything like that. What matters is that it actually works. It just serves the use case.
Yeah. Also, just to add to that, I think there's a growing consensus within the folks in India about currency devaluation as well, right? We've been seeing that trend with our INR, right? And that's something that's been seeping into the younger population as well. And as a hedge, people see Bitcoin as the ultimate hedge right now. Of course, there is the huge population that still believe in physical gold, but as far as younger population, is definitely Bitcoin that we're seeing a future in. Yeah. Amazing. So I think I wanted to also just talk about the financialized aspect of Bitcoin, because I think that's a bit of a gripe that I'm currently having with as well. And I think a lot of people are questioning this entire model of, corporate adoption of Bitcoin and that sort of trend that's happening right now. I think there's a school of thought, right? That if it's in a brokerage account next to your index funds, how is it different from a tech stock, right? And is it basically undermining the entire ethos of Bitcoin, the decentralized ethos of Bitcoin that it was built for? Do you think that's a fair read? And my second part of that question is, does that actually worry you?
Yeah, so I think this kind of financialization, if you can use that term, was to a large extent inevitable with Bitcoin's success. As I wrote in the book, I strongly believe that Bitcoin is to a large extent inevitable in terms of gaining global dominance in as money, as global non-state money. And this kind of like derivative making just comes along with that. I don't think it is really that threatening to Bitcoin itself, Bitcoin as the network, but I do believe it might be pretty risky to people that only gain Bitcoin exposure to these instruments, who only buy ETFs. And the parallel from history we have for that is Executive Order 6102. That's the executive order of President Roosevelt in the US in 1943, where by the presidential executive order, all the gold that was held by US citizens was confiscated by the government. Listeners can go look it up, Executive Order 6102. And I believe with Bitcoin, we see similar thing unfolding, because a lot of people will hold Bitcoin only through ETFs, through Bitcoin derivatives on at brokerages, or Bitcoin on an exchange. Also, there's like the KYC issue is very big. Even if you buy Bitcoin on an exchange and then withdraw it into your wallet, it's very easily traceable that you are the owner of that Bitcoin. And I think there might come a point in the future where that Bitcoin will be confiscated, either 100%, like happened with gold in 1943, 100% confiscation, or it can be like 10% confiscation every year or something like that, like some kind of specific tax. And we see already in the Western Europe that this is in the works. It's called unrealized capital gains tax. Netherlands is discussing it. And that's basically confiscation. So I believe these highly regulated, highly surveilled instruments are mostly risky to the holders because the Western governments are basically in a debt spiral. They are struggling to raise money from the tax base. They're also in a very high debt, and they're going to look for funds just where they are. And if Bitcoin keeps being successful and keeps appreciating against the fiat currencies, there's a lot of gains to be made from that for the governments. So they're going to tax and confiscate that Bitcoin. So I believe only Bitcoin in a self-custody and ideally a non-KYC Bitcoin is what's safe against the governments. So yeah, that's the risk. That basically you might think you own Bitcoin, but the government will just take it from you in the end.
Yeah. Amazing. I think we mentioned self-custody there, so I want to bring it back to that central theme. We can talk about adoption, but if people are buying Bitcoin on a centralized exchange and leaving it there, they're one hack away, or one, like you mentioned, regulatory freeze away from losing almost everything, right? So we've seen that happen as well. We've seen it with, of course, FTX being the obvious example, but we've seen some high-profile hacks over the past few years as well. Now, my question here is, of course, you spend a lot of time on self-custody education at Trezor. Is that conversation landing differently depending on where you are in the world? So, for example, are people in Nigeria or Argentina more motivated to take self-custody compared to, say, London or New York, for example?
Yeah. So the way Bitcoin is used in the global south is usually for payments where you don't really hold too large an amount of Bitcoin over any given period. So you might have like $100 worth of Bitcoin, for example. So it doesn't really make sense to buy a hardware wallet for that. So a lot of people that actually use Bitcoin in the global south tend to use custodial Lightning, for example, a Blink wallet, and I think that wallet is very good for that purpose. So the way we explain it in the Trezor Academy is as a sort of progression. It's very fine to use Bitcoin on a custodial Lightning like Blink if it's like up to $50 or $100. It's not such an issue then, but it's an issue if you have $1,000 on Blink. That might not be safe. So we explain it as a progression. You should go from Blink maybe to Phoenix, which is a self-custodial Lightning wallet, and then if you have more funds, you should consider getting a hardware wallet like Trezor, and doing the whole on-chain cold storage kind of thing. But in terms of like our market, we mostly see sales in the West, in the US and in Europe. We do have some sales in Africa and Latin America. It's a growing, developing market, but the the fact is people have much smaller purchasing power and tend to use Bitcoin more as a day-to-day payments tool for which you don't really need to have such a strong cold storage security.
Mm-hmm. Interesting. Just to bring it back to India as well, I think over my experience of this entire space over the past 5 years or so, I have seen that there have been a considerable amount of people actually learning about hardware security. And I think the hesitation there is basically that the onus is on you, right, to keep your funds safe. And I think that is the biggest sort of learning curve almost, which people are still, wrapping their heads about. But once that actually comes through, I've seen that the step to purchasing a hardware wallet isn't that long.
Yeah,
And yeah, I
I
think
mean,
that sort of trend.
yeah, it's interesting. So what we definitely see is there's a high level of institutional trust in the West, and there's basically zero such trust in Africa, for example. People don't trust banks. People don't trust like official institutions too much because time and time again these fail them. So, but again, as you say, it might not be that much like that. There might not be that much focus on individual self custody, more like in the family or in the community. And we see very interesting projects like FEDI with like federated custody kind of situation, which is basically tailored to how people tend to understand savings in Africa, for example, where it's more communal or based on a broad family relationships than on a very individual level. So we don't really see that much like uh, institutional trust. We don't see that much like atomic individualism. It's a little bit more based on family and communal and community. And also that's maybe why like circular economies are picking up at such a fast pace in Africa, because that's like just community coming together, discovering and using this kind of tool in a way that is mutually beneficial.
Mhm. Amazing. Um, so we've discussed, self-custody. I think a huge piece of, Bitcoin and of course crypto story right now is the government piece, right? The regulation that's happening. We're on the brink of something probably monumental from the US that's going to happen perhaps this week. But we've also seen full crackdowns in, say, China. We've also seen that in India in the past. Uh, that have tried to choke off the entire crypto space through the banking system. Uh, so, in your experience, my question, I suppose, is does regulation end up accelerating grassroots adoption or slowing it down? Because there's an argument that bans actually push people further into self-custody and peer-to-peer transactions, which in a weird way might be more aligned with what Bitcoin was actually built for.
Yeah. I mean, I would say economic laws are much more powerful than the man-made laws in the long term. So, if there is an incentive to opt out of the fiat system and get on Bitcoin, then that's going to happen, whatever the government wishes for the population to do. So, and we've seen that like many times. This is nothing new. Like economic laws always prevail. We've seen that in the Soviet Union. We even see that in the North Korea today. People tend to find a way to just make their lives better, even if it means doing something illegal. So I would say regulations in the long term are pretty much irrelevant. It doesn't really matter that much for Bitcoin adoption whether governments are friendly or hostile. In the end, Bitcoin, if it has a use case and people have this pressing need to opt out of the fiat system, then Bitcoin is going to prevail. But it can slow things down in the short term for sure. For example, right now in South Africa, we see the government's push to basically ban self-custody, where you would have to register and hand over your Bitcoin to some regulated institution. Really crazy piece of legislation, and the local Bitcoiners are fighting against that. Even if they're successful, I mean, people are still going to self-custody their Bitcoin. So I think pretty much irrelevant in the long term. But in the short term, yes, there can be quite a high degree of risk to individual Bitcoiners if government makes Bitcoin illegal and tries to confiscate it of you. You might be on the receiving end of that. So people should be very cautious. I mean, I don't want to make people think that Bitcoin is inevitable, so nothing matters, and you're gonna, retire at 40, no matter what you do, if you have like one Bitcoin to your name or something like that. It very much depends, like how you hold that Bitcoin, whether the government knows about it or not. Because I don't think like these kind of regulations and bans and such, it doesn't endanger Bitcoin as such, but it endangers individual Bitcoiners.
Yeah, I think there's a lot of noise that's being placed on regulation now, especially, of course, since, like you mentioned, in the short term, there might be fluctuations in the dollar value of Bitcoin. But I think in the long term, I don't think it really, like you mentioned, disrupts the entire ethos and the background of what Bitcoin was built for. So I'm definitely on the same page there. I think just looking forward now, let's say if we fast forward 5 years from today, if I look back 5 years ago, the stuff that's happened with Bitcoin adoption, I don't think I would have predicted it. Despite whatever the price might be saying, the underlying adoption rate of Bitcoin, if you look on chain, has actually gone through the roof. But if we look 5 years from now, what does global adoption look like? Is the West going to close the sort of grassroots gap, or do you think the center of gravity for Bitcoin has already shifted to the South?
Yeah, so I think the West is basically trying to bring Bitcoin under control. They're like, let's say Europe, for example. Europe is definitely pushing for making self-custody as hard as possible. Probably not going to outright ban self-custody like they're trying to do in South Africa, but they will make it as hard as possible. You will have to go through all kinds of hoops to withdraw your Bitcoin from an exchange. And KYC AML everywhere. So Bitcoin that's under control and that's fully surveilled. That's what we see in the West. And there's basically going to like emerge two kinds of Bitcoin. There's going to be like the fully regulated KYC Bitcoin that's on exchange or in an ETF, and you basically don't do anything with that. You don't make any transactions, and the governments will have no problem taxing or confiscating that kind of Bitcoin. And there's going to be the self-custody non-KYC Bitcoin that's interchanged peer-to-peer. And people do like grassroots payments with that. So that's what's going to happen in Europe and in the West, probably in general. But the epicenter of Bitcoin used as an actual medium of exchange, that's going to be Africa and Latin America, maybe parts of Asia to some extent as well. Just the amount of circular economies we have seen emerge over the past couple of years. That's really amazing. That there's been just a Bitcoin beach back in 2021, and maybe one more circular economy in Netherlands. I think that's the oldest one, Bitcoin Arnhem. But we've seen like one or two circular economies 5 years ago. Now there's like 50, maybe even more, and most of those are based in Africa and Latin America. And there's going to be 500 5 years from now, for sure, or maybe even 5,000. So Africa is definitely leading leading the world in terms of Bitcoin as a medium of exchange, as a payment mechanism. And we see some very cool tools coming out of Africa, like Machankura, where you can use Lightning payments on feature phones, like not smartphones, but like dumb phones. And that's a very African-specific project. Or we see stuff like Tando from Kenya, where you can pay from Bitcoin Lightning wallet to any kind of M-Pesa wallet in the end, meaning you can live on Bitcoin 100% in Kenya, which is amazing, and it's impossible to do that any place in Europe. So we'll definitely see Africa taking lead in terms of Bitcoin as a medium of payment. Yeah.
Amazing. I think for someone tuning in and listening in, maybe they're in a country where the financial system has completely failed them. Maybe their savings have been wiped out by, say, inflation, or they've been, locked out of the banking system altogether. What's the one thing you want that person to walk away from this conversation knowing?
Yeah, so I would say that person probably understands internet and how major internet is for information exchange. We can talk to each other. We can learn about anything we want on the internet, for example, via YouTube or Wikipedia, or chatting with a ChatGPT, which is really amazing. That's really awesome. And that has not been possible until 20 or 30 years ago. And Bitcoin is basically the same, but for money. Andreas Antonopoulos used to call Bitcoin the internet of money. And this is precisely what is happening. Internet facilitated a free flow of information, and Bitcoin is making that possible for our money, for our purchasing power. You can earn money from anywhere in the world, wherever you are, through Bitcoin. You can send money to anybody in the world, wherever you are, through Bitcoin. You can send money to your family, for example, if you're in Botswana and your family is in Cuba. This is very exciting. You used to be able to just send an email, but right now you can send $100 through Bitcoin. So that's the one thing I would like the listeners to take away. Bitcoin is the internet of money, and it changes so much.
Perfect. I think that's a great way to end today's conversation. Joseph, I just genuinely want to appreciate you for coming on. I think this is one of those conversations that's easy to have at a surface level, but I think it really rewards when you go deeper. So thanks for doing that with us today. For everyone listening, if you want to learn more about self-custody and Bitcoin education, check out Trezor Academy. We'll drop all the links in the description below as well. That's it for this one, folks. If you got something out of it, remember to like, subscribe, and share it around. We will catch you all in the next one.
Thank you very much, Anush.
Thank you. Thank you, Joseph.